right, everyone, we'll go ahead and get started. So I just want to start by saying hello. Thank you for joining us today. My name is Dallas Kriebel. I'm our communications specialist here at Farm Credit East. And before we get started, I'd just like to offer a few technology tips to keep in mind while you're viewing today's webinar. All attendees are muted throughout the presentation. Once in a while, it's a good idea to tap your mouse so that your screen doesn't go to sleep during the presentation. There will be a time for questions and answers at the end. Questions can be text chatted in at any point during the presentation. And to send in your question, just click on the question mark button on the right side of your screen to expand the question box where you can type it in. And a recording of today's webinar, as well as the presentation materials, will be available at farmcrediteast.com/webinars, as well as on our YouTube channel for access after the webinar. And now I'll turn it over to Dario, who's going to tell us all about the Maine Dirigo Business Incentives.
Thank you, Dallas, and good morning, everybody, for joining us today. My name is Dario Arezzo, and I'm the Chief Financial Services Officer here at Farm Credit East. And we're excited to be able to get this information that we're going to talk about here over the next 45 minutes or so to our Maine customers and get you information to go into the new year prime for success in this credit. For those of you that may be on the call that do not know, Farm Credit East certainly is a cooperative, so that means we're owned and governed by the same forestry members, fishermen, farmers that borrow from us. And part of that cooperative mission is to find ways to enhance and bring value to our customers. And with knowledge exchange through our communication industry publications and efforts like this, that's what we're striving to do as we stay aligned with our board of directors, who are just like you, who are member borrowers, looking for ways to provide outreach and get you the information to be successful. For those of you that aren't aware that are on the webinar, we have offices in Maine, in Auburn and Presque Isle, with very talented staff able to assist as those of you are in the field looking for who may be up there in Maine. Ethan Robertson and Autumn Dow are both in the Maine state and service those locations and are available at those areas to be able to help you out and assist in questions that we will get into with this credit. So to kick us off here, the first thing that I wanted to start with this tax credit incentive program that Maine is offering beginning January 1st is what sectors of industry are eligible. Agriculture, forestry, fishing, all of those are eligible. Manufacturing is eligible, also long distance freight transportation. Also things that probably are relevant for people on this call, but data processing, computer design services, some engineering and architectural stuff. But the stuff you see on your screen is really probably what's relevant for those of you on this call. How much are we talking about? Well, it's roughly going to be either 5 or 10% of eligible CapEx, capital expenditures, right? Stuff that you buy or build on the farm based on your location. Generally, we'll have it at 10%, unless you can see, for example, in the 5% category, if you have a business in Cumberland, Sagadahoc, and York counties, so kind of near the more metro areas, right, of the state, then that limit will be 5% of the eligible investment. And we'll get into what constitutes an eligible investment. But for those of you that are in those areas, 10%, so a pretty healthy number of a possible tax credit. How big is the tax credit? So there are credit caps in the legislation, but they're pretty big, I would say. $2 million per business per year is the maximum amount of tax credit that you can generate from this program. And the really neat part about the credit is that up to $500,000 of that is refundable in that credit year. So if you did get a $2 million credit based on what you spent there, $500,000 of that is actually refundable cash in your pocket as a producer. So very big dollar amounts that are at play here in the state of Maine. There's also a smaller portion of these tax incentives that relate to your employees. So you can also get $2,000 potentially for each qualified employee that you have engaged in certain training programs that the business has folks complete. So another way to get some credits based on what you offer for training programs. You can see a list on your screen of what those eligible training opportunities might be for your employees. So you can take a look at those up there, and there's certainly more information if you Google those things if you haven't used them before or are unaware of them. But keep in mind, this credit is kind of twosome. It's either CapEx stuff, which is that's the big bang for the buck, but there's also the employee piece that we're talking about. So let's move back on to the credit piece on the CapEx here. One of the ways the rules work here is that the expenditures have to exceed $50,000 for your CapEx on the farm for that year. So for example, right, the first 50 grand that you spend on equipment wouldn't count, but that next dollar begins to figure the credit base for the incentive. So just a small little threshold there, or big, depending on the size of your farm, but just to be aware of that there is that $50,000 number that you have to spend in aggregate more than that. And we did clarify, at least through some email here, it's not per piece of equipment, it's just a gross dollar amount. So if you spent 50 grand on stuff, the next 100 grand that you spend would be eligible. So of the 150 you spent, that 100 grand counts, not the whole 150. So let's look at an example to put that into layman's terms for us. If you spent $120,000 on eligible business property, let's assume you're in the 10% area in the state of Maine, you can get 10% of the amount over $50,000. So in this example, $70,000, and you'd have a refundable tax credit cash in your pocket of $7,000. So pretty nice there. So, and obviously that number, right, if you run examples and use bigger dollars, that they get quite larger. There are some restrictions on making sure the property that you purchase or construct is eligible. So if you're a multi-state business, you do have to use the asset in Maine, that's a requirement. It has to be used exclusively for your activity that's eligible. So for example, if we're saying your farming is an eligible activity, you have to buy something and use it exclusively for farming. You couldn't use it for farming and a bowling alley. I'm being extreme here in my example, but it's got to be used in that qualifying activity. And the third one there is it has to be placed in service and subject to depreciation. So what does that mean practically? Well, land doesn't count because land's not subject to depreciation. It's got to be placed in service. Those of us who do tax planning and customers on the call that engage in tax planning, think of that like, right, if you buy a piece of equipment and it's stuck in a port somewhere in LA and not on the farm, it's not placed in service because it's not on your premise able to be used. So it's got to be able to be placed in service and subject to depreciation, or at the very least eligible for depreciation if you, for example, took section 179 on the asset. So back to the example I just shared with you a few moments ago, we're assuming in this example where the farmer got a $7,000 tax credit that the property was used in Maine only for farming and that it was placed in service. So it's not in a port somewhere, it's on the farm, able to be used for its intended purpose. So just trying to round out that example here with those three items that are critical to ensure that the base of which taking the credit on is actually eligible for the tax credit. There are some important restrictions on what does not count for the credit. You can't have a depreciable life of less than 5 years. And that's sort of an IRS terminology because in farming, for example, different assets have different class lives. For instance, if you're a dairy farmer, a cow is a 5-year asset. A greenhouse, for example, is a 10-year asset. A general barn is a 20-year asset. not many things that fall under the less than 5-year asset if you're in production agriculture, so not too much to worry about there. What else doesn't count? You cannot have property purchased from an affiliated business. Okay, well, what does that mean? Think of that as related entities. If me and Dallas own 3 companies, let's say we're a related couple, and we own those companies, both of us, and we buy and sell from our companies, we can't sort of churn assets back and forth from related businesses and qualify for the tax credit. So that's important to understand there, to be aware of there. So there's no credit to be gained by trying to sell from a company that you may own with your spouse, for instance, or other your relatives that then sell to the other one. If it's the same people, not going to be successful in that endeavor. There's also some preclusions on any property that would be located at a retail sales facility and used primarily in retail sales. So that would be like activity associated with the purchase of goods or tangible property, right? Retail, think of your typical retail establishment. It's not going to be able to qualify there. What is a retail sales facility? It's a structure where you have, maybe at a business, that's serving customers who are at that location to purchase goods or to rent goods. So that's important to be aware of. And primarily is always like a greater than 50% test is how we would define primarily as well. A few other items that are not eligible. So any vehicle or watercraft which a tax has been imposed under certain chapters of the Maine law. So probably, if you're paying, sales tax on a vehicle, for example, in some fashion, that wouldn't be eligible. Qualified rehabilitation property, that is also an area that's going to have preclusions on it, as you can see on your screen. Also, real property placed in service before the tax year for which the credit is sought. So there's preclusions on that as well. Real property could be, right, for example, a building. If you're doing it, and we'll talk a little bit more later on here that it is critical, but I'll reiterate right now at this point too, you have to do your application. Yes, there is an application. I'm getting a little bit ahead of the program here. And it has to be, you have to get that and be certified before you begin to buy Cap X that is eligible. So as I mentioned with like the cows and the barns, most capital assets will qualify as a production farmer. You think of like stuff that you will use in production to grow what you're growing is going to be eligible for this credit because most assets are over that 5-year life. So important to point out that shouldn't prohibit very much on the farm. Looking at the tail end of how this credit works, there are some recapture provisions here, and this is sort of similar, I would say, almost very to I work with a lot of customers in New York State, for instance, and similar language here. So the idea is, if a state's going to give you a credit and they're going to give you a percent, let's say 10% in the state of Maine here for these credits, minus the 5% counties, you have to hold it and use it in production agriculture. So if there is a disposition of the asset, in this case, if it's not used for the entire 5-year period, there is some recapture of the credit amount. And there's a formula as you get in the regulations of how this works. It's essentially equal to the credit amount times the number of years remaining in the 5-year period. So you do some math on it and some rounding, and you would have to recapture that or give it back basically to the state if the asset's not held for that entire 5-year period. And that's important to understand there because a lot of farmers will trade in sometimes frequently, sometimes not so frequently, but as you have trades and stuff that you've bought that could trigger a recapture. So some years, for example, if you have a trade that didn't hit the 5-year period on an asset, you may have some recapture on that stuff, but also you may generate additional tax credits on stuff that you bought for the current year, and they may net out to still a positive amount, but we just got to keep both of those factors in mind as we think about our trade-ins and how it interacts with this credit. There are certain businesses that are ineligible. You can see them up on the screen here. You cannot be a public utility. You cannot be a business certified as a qualified Pine Tree Development Zone business. If you have approval from the Maine Employment Tax Increment Financing Program, that's also not going to make you eligible. And then there's a couple there under a few sections of the tax code regarding shipbuilding and paper manufacturing facility investments. All that stuff would make your business ineligible to participate in this tax incentive program that we are talking about today. There's also some caveats around layoffs, which would make the business possibly ineligible for these credits. And they define that very specifically in the tax code here up in Maine, where if you have a reduction in your workforce, and I guess to take a step back for a second there, the reduction in workforce, you have to have at least 20 or more people employed. So if you're a smaller business, these rules won't apply to you. And they define that reduction of workforce in the layoff sense of at least 2 consecutive months within the same tax year, where at least 20% of your employees in the state have kind of been laid off. They do exclude from the definition of a layoff any type of reduction of your workforce due to some catastrophic event. So you didn't intend to lay people off as part of a business plan, but just something bad happened that were out of your control, and people had to be let go, for example. So it's important to understand that too on both the 20-person amount there, and that's kind of looked at in the preceding 4 quarters of how they would look at that to see if you're into this rule kind of subcategory here, and then judge it based off of that. So important to understand if you do have reductions in workforces that could, in some cases, impact your qualification for the tax credit. So let's take a look at an example here. We'll go through a couple iterations here before we get into the application and then some questions. But if you purchased, let's say this farmer had got certified on January 15th and bought 140 grand of eligible property in March, then this person would be eligible for the 10% of the spend over that initial $50,000, or in other words, 90 grand of a refund or of eligible credit amount base, which would be a $9,000 refundable tax credit. So a $90,000 base, giving that customer a $9,000 refundable tax credit. An iteration spin here would be if all that equipment was bought before the date of which the business did their certification with Maine, that then it would all be ineligible for the credit. So that's a really important point as we gear up here towards 2025. I would ask all of you on this webinar to make sure that you think about, as best you can, plan, of course, but planning here is important to think about it or work with your tax advisors to assist you. But you have to get this application done and make sure you're good to go, and then commence your CapEx spending or building of a barn, for instance, if you want to take full advantage of the tax credit. A little bit larger example here. Let's get wild and say you spent $20 million on an expansion. So we take away the 50 grand, like I mentioned, that hurdle of 50 grand. Now we have a $19,950,000 credit base. So we would have a $1.995 million tax credit that we would have earned as that business. And of that amount, $500,000 is refundable cash in your pocket, with the remaining amount carried forward in a non-refundable credit sense. So that 1.495 number would carry forward for the next 5 years, and you could use to offset your tax in subsequent years, but only that $500,000 in that year is going to be refundable. So this is another example on the extreme end of, as you're maybe spending massive money, if you're a larger business, how that would work. So one of the questions, interestingly, as I was talking to the state last week in anticipation of this webinar with Ethan Robertson, who's on this as well, we were asking just some clarification there on the refundability of, okay, the $500,000 gets refunded, just clarifying that the remaining 1.495 doesn't get refunded. But as I got thinking about that construct for customers, and to talk to customers about some planning opportunities, there certainly could be potential planning opportunities. Like for example, as I was thinking about this, if you were going to buy, X amount of equipment where you're going to generate like in this example, almost $2 million of credits, maybe it makes sense for a producer to just do enough to get the full $500,000 refundable in year one, and then buy the other X amount of equipment in year two, so that you maximize the refundability annually. So it's just a thought there as you think about planning and how to maybe optimize the refundable portion if you are spending large amounts of money on the farm. Because in some cases, if there's not a lot of state income tax to offset, then really a non-refundable credit doesn't give you the biggest bang for the buck in your business, because you're carrying it out into future years. And if you get out your finance calculators there, right, that future year credit won't be worth very much to you if it offsets tax in year 2, 3, or 4, or even worse, if you have no tax in years 2, 3, 4, or 5, then that non-refundable credit becomes not really effective at all for your business. It's really the refundable piece that really makes a dent in getting money back into your pockets. So there is, if you Google this, you write tax incentive program, you go to the Maine website, there's a link there. I was there the other week here, and I took a screenshot of what you're viewing on your screen. It gives you the link to how to apply. You click that blue hyperlink up there at the top left, and then it'll take you to the website through the department there in Maine. You'll register for the website. You will fill out an application, and you will put a bunch of stuff in the application that then Maine will take a look at and say, yes, you're good to get certified, or maybe they have additional questions, or maybe you're not eligible. And so let's talk for a few minutes here as we round out the presentation of what they're looking for in that application. So as you're thinking about applying for this, which you all hopefully should be starting to do that, because it is open to do that. You should be applying for this and getting that application as soon as you can. They're going to ask you for, right, where is your business located? They want to know, okay, what the business is, where are you located? They want a description of your business. They'll ask for, I believe, the NAICS code. That's what's on your federal tax return. For those codes are basically tell the IRS what industry you're in, for example. So every tax return in the top left corner, will have a NAICS code that they'll want to know. And they want to get an idea of kind of what this looks like from a budgetary perspective for the state of Maine's coffers. So they'll ask you to do a projection of a 5-year capital investment of, what do you think you might be having coming down the pike there, and to fill out a 5-year projection on that front, so that the state can kind of budget and understand what they're looking at for possible expenditures. And similarly, if you're looking at utilizing the employee workforce training credit piece of this, they'll ask for what projected amount of workers you may have in qualified training programs, as we discussed at the beginning of this webinar. As I mentioned, the state will certify the business. That certification lasts for 5 years. And remember, I mentioned it at the beginning of one of the first examples that I pointed out on this call, that eligible stuff that you buy that qualifies is only going to count after you receive your letter of certification from the state of Maine. So again, if I can hammer one thing to you, is just really keep that in mind and get the certification and then buy the CapEx. And then you need to intend to place in service or have workers go through the training programs within 2 years of your certification there, just to kind of make sure that you're intending to kind of buy what you said you might buy. So that's part of the rules as well. So there's a few hurdles just to get up and running here, but nothing really insurmountable, and should be pretty straightforward, pretty easy to complete. Those of us here at Farm Credit are here to answer any questions as you go through the applications, as you think about tax planning, not only for 24, but also for 2025. And we want to make sure that we give you all the tools to be successful, to really take advantage of this opportunity here, because we want people in Maine to be aware of this. We know a lot of folks still are not aware of this program, and we want to help as much as we can to make sure you take full advantage of what the state is offering, because it really is a great program that I think will add a significant amount of value directly into the hands of producers. And so with that, Dallas, that about wraps up my half an hour of what I wanted to share with you on how this program works, what the requirements are, and just let folks know that we are standing by, willing and able to help as needed. And I will at this point open it up to any questions if there are any. So Dallas, if you're back here and you if anything has come in, let me know if you've seen anything in the text chat to date, or anything popping up that's pressing for folks.
Not seeing anything right this second, but we are trying to add Ethan Robertson in as a panelist so that he can share a few comments that he has. So
sure, that would be great. Yeah, if we can get Ethan Robertson, let me know when he pops in there. I'm seeing I got one here. Yeah, so question here on clarifying, CapEx. So as you think about your farm, okay, get your certification, and now, if you buy a cow, right? If you buy a combine certification, if you build a building, right? You can construct a potato storage facility, for example, or a general purpose barn. The answer is yes. Those things do qualify for the tax credit, and those will come back. And what's important, interestingly, because I'm doing this right now with New York State, who has a similar tax credit program, it's important to keep in mind that part of good proactive tax management strategies, when you do in fact receive the refund, people on this call should be aware that that will become taxable income, from for the tax return. So still waiting for some clarification on Maine, but for example, federally, like for example in New York State, when a farmer gets a refund of money from these types of incentive programs and it's back in their pocket, it adds to your taxable income. So for example, if a farmer in Maine got certified, if they got back $100,000 in 2025 or 26 rather, whatever year they got the money back, for that year, as they look at their income for tax planning, that is going to add to their taxable income that needs to be understood as those farms work with their tax advisors for year-end tax planning. So that will add, in fact, to taxable income, and that's a great segue to switch over back to Ethan here, because I see Ethan is up here as a panelist. So welcome, Ethan. Can we hear you? Let's see.
Yep, I think so. Can you guys hear me all right?
Yeah, great. And Ethan's up there in Maine, as I mentioned here at the beginning of the webinar, and he has a few thoughts around some practical kind of what he's seeing up there, Ethan. So why don't you kind of tell us what you're seeing up there in Maine, or what things people might want to consider from an industry standpoint that they should be keeping in mind here?
Yeah. No, I just you listed off a bunch of them with that last question. I was just going to say a couple of the examples of things that I had seen that I thought would qualify, and people should be applying for the credit if they think they might be doing these in the next year. Whether it's a new dairy facility or a potato storage facility, maybe just milk storage tanks, tile drainage, expansion equipment, grain bins, tractors, irrigation. As we read the law, all of those things would be eligible in most instances. So those are things to think about. I wanted to say that this is a good chance, and your loan officers would all be like giving the victory sign here, but this is a great time to think about your CapEx for the next year. If you haven't made a plan of what you're going to buy over the next year or even two, think hard about that. Think about what you might be buying next year, if it's a tractor, or if you're building a building, or going to install some irrigation, or buy cows, something like that. You need to think about it now and apply for this project. It would be too bad to miss out on it if you didn't apply ahead of time and plan ahead a little bit. The big point that I've been saying is this type of credit is not new to Farm Credit or new to the region. New York has had one for a while that Dario is pretty familiar with. He and I discussed a lot the differences between the Maine credit and the New York credit that some of our farmers have been getting this year and last year. And the big deal is that this is refundable. At least a big portion of it is a refundable credit. So in the past, if you have had tax credits that didn't make all that much sense to you or seemed like it was going to be a big impact on your business because you don't tend to have a lot of tax due, this is still a good tax credit for you to make sure to apply for, because the credit's refundable. It doesn't just knock down whatever tax may be due. It can refund cash back to you. So keep that in mind. And then the last thing we did, oh, sorry, go ahead.
No, go ahead, Ethan. Yeah.
So the last thing I was just going to say is we did double check this with the person in the state of Maine. It doesn't sound like there's going to be any leniency on if you just started building a barn last week and didn't apply for this credit, and it would be in service next year, a big barn. They're not going to let you have that credit unless you applied ahead of time. So make sure to apply now for anything that may be coming. And if somebody is on this call that did already apply and is thinking that we're saying something different than they have heard, you could have started applying back in June. June or July, I think, was the first time. So if you did do that, then you're probably all set. But for the most part, if you have not applied and are working on something, it's not gonna be eligible. And then the last thing, just it lasts for 5 years. So think about what you may be buying and what might work on this. If you go through a skid steer every 2 years and are constantly trading them in, it might not be the perfect credit for that. Think through it a little bit. It might be more hassle than it's worth. But
yeah, as you were talking, you brought up a great point with, like, I think you mentioned tiling, because I've run across this, and it's very parallel New York here to Maine. But let's say you have your operating LLC, and then you have a land LLC. You want to make sure, as maybe you acquire land, you want to make sure that the tiling is acquired in your operating entity, because let's say you go through certification, you're going to be certifying your operating entity. So oftentimes a lot of folks will just buy the land, and then the tiling will end up being in the land LLC just as an afterthought. Well, that land LLC, back to Ethan's comment he just made, that would not be a certified LLC for CapEx, as a farming entity. So just being real cognizant on your purchases and making sure as you acquire or do stuff like that, that you're really thinking through proactively, as you're working with your advisors to understand that, yeah, where you place stuff does make a difference, and it could mean the difference between eligibility and not. And I've had cases over the years, I could tell you from the last decade in New York on the similar program, that even though some stuff was bought in the land LLC, it ends up not being eligible. And so really important to keep in mind that for tax credits, they are viewed as the government giving you something, right, in the tax code, and you do have to follow to a T those items there. So really, really great point there, Ethan, to round us out here. So Dallas, I would say if there are no other questions in the text chat, there is one question I see here on where will your presentation be available to review? So I will work with Dallas. This program is recorded. We knew that I had a few Maine customers reach out to me who were not able to attend. So we are going to make this recording available. We will provide a PDF version of the slides, for our customers to. We'll work with that. It'll be probably on our website somewhere. I'll work with Dallas to iterate that, or maybe we'll do a blog posting, or maybe a combination of those things. But we will make all this information available to everybody on the call today. So we will do that. And with that, I do not see any other questions. So I think, Dallas, I would just say to everybody on the call, thank you for joining us. Let us know if we can provide any further context or help at all as you navigate this credit. And thank you for being with us this morning.
Yes, thanks everyone. Thank you, Dario, for that great presentation. And the presentation and the recording will be available at farmcrediteast.com/webinars tomorrow. And we will find other ways to put this out too. Like Dario said, we'll probably throw that in a blog. So just stay tuned for more.
Thank you, Dallas. Thank you, everybody. Have a great rest of your day.